and welcome. We're so happy you're here. I'm Sarah Schutzman, CFA. I'm a managing partner of Providence Heights Capital Management, a hedge fund based in Chicago, and co-founder and president of Collaborative WIM. For those joining us live, drop a note in the chat and let us know where you're tuning in from. We love to hear from you. When my friends and I started Collaborative WIM, our vision was simple: providing unique access to high caliber speakers and meaningful networking. Today, we're proud to lead the gender inclusion efforts of the CFA network globally. As a fully volunteer-led nonprofit, we have no employees, just dedicated professionals providing world-class resources at no cost to you. Since 2020, this community has touched thousands of professionals across 6 continents. From our cornerstone events like this one to our coaching, ambassador, university, and returnship programs, everything we do is designed to foster growth and connection. The best way to stay updated is to follow us on LinkedIn, and you can support our efforts by sharing with your colleagues. Thank you to our co-hosts at CFA Society New York, our sponsors, and to each of you for being part of this global network. We're thrilled to hear from our friend, Marcia, today. It's my pleasure to introduce my co-founder and vice president, Ariel.
Hi, Sarah. Thank you for that good introduction. And I'd like to welcome everybody here today, whether you are a returning guest or if you are new to a Collaborative WIM event. Welcome to our first quarter of 2026. My name is Ariel Bitoni, CFA, and I am also a co-founder of Collaborative WIM, and I am also the program director. As Sarah mentioned, we are very pleased to be partnering with CFA Society New York as our host for the program today. Their continued support and collaboration has been instrumental in helping us bring meaningful conversations like the one we're going to have today to the CWIM community. I would like to invite Tiffany Newton with me today to share a few words on behalf of CFA Society New York.
Good afternoon, everyone, and welcome. I'm Tiffany Newton, Director of Events and Programming for CFA Society New York, and it's a real pleasure to have you here with us today. CFA Society New York has a long and proud history. Founded in 1937, we are the largest CFA society in the United States with over 10,000 members, representing thousands of investment professionals across the New York region. From the very beginning, our mission has been clear: to advance the highest standards of ethics, education, and professional excellence in investment management. Being a member of CFA Society New York means more than holding a credential. It means being a part of a community committed to lifelong learning, thoughtful debate, and responsible leadership in global capital markets. Events like today reflect that commitment by bringing rigorous ideals and influential voices into meaningful dialogue. On behalf of the CFA Society New York and Collaborative Women in Investment Management Initiative, thank you for joining this conversation. Events like this reflect what we aim to do as a society: bring together thoughtful practitioners, timely ideals, and rigorous discussion that helps us become better investors and better decision makers. We're especially excited today to welcome Marcia Page, co-founder and chair emerita of Varde and founder and CEO of Empowered Capital. Over more than 3 decades, Marcia has shaped the field of alternative investing, building Varde's global liquid markets platform, guiding the firm's growth and championing emerging managers through Empowered Capital. In today's complex and fast-moving markets, her perspective on innovation, discipline, and delivering strong, lasting outcomes is more relevant now than ever. This session is designed to be interactive, so we encourage you to lean in, reflect, and engage with the discussion and Q&A. With that, thank you again for being here, and it's my pleasure to turn things over to our moderator to begin this conversation.
Thank you, Tiffany, and thank you again to CFA Society New York for your partnership. Just before we begin, just a few quick housekeeping notes. If you haven't already, please open up your chat window and you can submit questions during the conversation, but we will reserve time at the end for Q&A. So again, we'll keep an eye on the chat if you want to submit them as Nancy and Marcia are speaking, or at the end if you want to raise your hand and ask live, we welcome that as well. So today's discussion is part of our An Honest Conversation series, where we move beyond traditional profiles and we focus on real experiences, decisions, and perspectives that shape a career. We are very excited for today's conversation and the opportunity to hear directly from Marcia in a more candid and a personal way. With that, I am very pleased to turn it over to our moderator, Nancy Vailakis, our CWIM Ambassadors Chair, who has also been instrumental in helping to shape and lead many CWIM conversations with our community. Nancy, I will turn it over to you.
Thank you so much, Ariel, and it's a pleasure to connect with everyone today from cloudy Miami. And it's perhaps a greater pleasure for me to be able to interview Marcia. Certainly someone that I admire in the industry, someone who built a substantial private credit business and has now moved on to build a second business, helping emerging managers at a time when depending on what statistic you read, it's either 60 or 70% of monies raised are going to, the top 6 to 10 large firms, many of whom of course, firms that you have heard of. It's nice to see such a cornerstone of the industry supporting the emerging talent that's out there. So I'm going to kick it off with the first question to Marcia. And this is a little bit more of a personal conversation rather than a market-driven conversation, which is exciting for me, given that I'm enmeshed in the first kind a good bit of my time. Marcia, just to kick things off, how do you feel your personal background may have prepared you or shaped how you approached your early career?
Yeah. Thank you, Nancy, by the way, and thanks to everybody that's sponsoring this conversation. I'm delighted to be here. And yes, by the way, Nancy, emerging managers' share of fundraising continues to decline and has been over the last 10 years to about 13% in the last full year. So just to fill out that thought. So yes, thank you. So I would just say the first thing is to note that I've had a very non-traditional route to financial services. And it started in a small town in Minnesota. I grew up in a little town of 2,500 people, Olivia, Minnesota. It's about 100 miles west of Minneapolis. We're weirdly proud of our identity as the corn capital of the world. So suffice it to say, I didn't have a ton of direct exposure to, or quite honestly, understanding of the financial services industry. My father owned and operated the local drugstore. So when I went off to college, I was clearly going to become a pharmacist, go back to Olivia and work with my father, who I adored. And I ran into organic chemistry, and that was a strong indicator that perhaps that wasn't my likely path. At the same time, I took a math and finance class out of the math department and fell in love with the math around finance and understanding present value and future value and internal rates of return, how it applied to business, to investing, and even to personal decisions. And I got hooked. Then when I graduated, really difficult macroeconomic environment, high unemployment, very high inflationary environment. And I went right to my MBA at the University of Minnesota, stayed back in Minnesota with the concentration in finance, and took my first job at Cargill, which is also a Minneapolis-based company, but a global agricultural firm. I was a financial analyst and ultimately was tapped on the shoulder to look at a high yield bond somewhere in my career. And then that ultimately is how I got into financial services. So even though my career and my early period of time wasn't directly related to the industry, I still have to credit my parents. They were phenomenal role models. I worked with my dad from the time I was 10 years old in that drugstore, and I learned the basics of business. I understood, and I liked to make money. I liked the idea of a P&L. And I also watched him interact with customers. I understood what it meant to operate with integrity and a high degree of customer service. And then my mom was this incredible force to be reckoned with. As a high school kid, I at times I think I was a little bit embarrassed because she was so willing to challenge the status quo. When she got ticked off at the city administrator, she ran for mayor, and she was the first female mayor of my hometown when I was in high school. So you just had this combination of I guess I'd call it great role models, willingness to take risks, challenge the
Hey,
status quo,
Sean, get
and
off the computer. Get off.
and oh, excuse me.
Oh, pardon. Is someone
Sorry, I thought I heard
routine,
a little bit
perhaps?
of. I thought I heard something. Any case, I'm willing to challenge the norms and incredibly powerful early experiences.
Amazing. I love that backdrop to the rest of the conversation. Thanks so much for sharing that about your family and your early career. And perhaps you've already addressed this in part, but early in your career, what experiences or roles most shaped the direction you ultimately took? I suppose, perhaps parsing off that next chunk of time between Cargill and Vardy.
Yes, well, I would say those a couple of component pieces at Cargill were super influential. So within a 10-year period of time, my first 10 years in this career, really, I had the benefit of a sponsor. I had the benefit of being able to commit capital early in my career, and I had the benefit of a very, first leap as an entrepreneur. So in each of those, I had a sponsor at Cargill. He was involved in hiring me very early on. He was multiple levels ahead of me. And little did I know that he was really actually taking a really active interest in my career. And I used that language of sponsorship very intentionally because he was putting chits on my career early on. He made sure I had visibility with senior leaders, and he brought interesting and increasingly complex projects in front of me, including a Friday afternoon where he called me and he said, "Hey, Marcia, do you know what a high yield bond is?" And I hedged because I really actually didn't know what a high yield bond was. And he had a stack back, of course, back in the day, it was a stack of paper that he sent over on a Friday afternoon. And I worked all weekend long on trying to really understand that high yield bond. And I came in Monday morning, and Bob, together with three others, heard the backstory and went out and bought $5 million of bonds on my 25-year-old recommendation. So that really set off the next step for me, which was really a game changer for me. And that is, I moved from that financial analyst role onto what was basically a trading desk at Cargill. Incredibly innovative idea. They were basically taking their merchants of grain who understood cash and futures and options and relative value and arbitrage, and moving them onto this desk to trade financial instruments. So here I was doing credit analysis on this incredibly dynamic and entrepreneurial trading desk, and they gave me capital to commit. So absolutely extraordinary. And I'd been at Cargill for 5 years. And three of those individuals with whom I'd pitched that high yield bond years earlier left to start their own hedge fund. And I put up my hand before they had a dollar raised, and I joined that hedge fund in the late 80s and managed a distressed debt fund, basically as almost a sole portfolio manager. So all of these experiences accumulated, but also in a way happened in a very, very short period of time. That was the first 10 years of my career. Absolutely extraordinary.
Oh, wow. I think being in person on trading floors has taught many of us what we could never have learned from a textbook, because it's very incidental with respect to news that comes through, and you really understand the markets after just hearing this 360 experience. And of course, in your case, deploying capital. Amazing.
100%. And we're such sponges early in our careers, right? So you're taking in a lot of information. I learned an extraordinary amount in that period of time.
Yeah, I'm remiss as a result of people maybe working from home a little bit more and not absorbing all those lessons, because there's so much you can gather from those around you if you
I
have.
think I think about that a lot too, Nancy. I mean, I had the benefit of basically an apprenticeship as part of those early years.
Right, you hear every play by play. Every time the Fed does this,
Mhm.
people move the book this way and such. You can't replicate that experience.
Absolutely.
And you've built and scaled more than one investment platform. What first pulled you toward building something of your own? And obviously,
Yeah.
being entrepreneurial with respect to running this distressed debt desk at a startup is certainly a lead into this broader conversation.
No, you're absolutely right, Nancy. So I think in founding, Yes, I founded two investment management firms, Varde Partners and now Empowered Capital. And I co-founded Varde Partners with two individuals. And you're absolutely right. The first piece was that I'd already taken the leap once. And so here I had been, operating basically as a portfolio manager within this hedge fund. And I know for many it's hard to maybe put yourself back in that time. You're in the late 80s and early 90s, but to have a toolkit where you were able to be long and short and in options and futures and across a wide range of asset types and trading in non-performing and sub-performing debt was highly unusual in the asset management business at that time. So part of the conviction was I'm like, wow, this is a unique set of skills. And importantly, you could see the tailwinds developing in alts, right? I don't even know, it was such a nascent business at the time. I don't even know if we really called it alternatives. But you could see sophisticated investors, and I was in those meetings with those investors, how they were thinking about diversifying their portfolios and building these into their portfolios. And so I developed conviction around alternatives. I will say I never dreamed the business would be what it is today, but for sure you could see the tailwinds. And then I reconnected with George Hicks and Greg McMillan, with whom I'd worked at Cargill. And we developed this idea together that if we brought kind of my capabilities on the more traded side of the business together with what they had stayed back at Cargill and done in investing small balance loan portfolios, predominantly out of the RTC, that we could create a fund with basically a spectrum of liquid to illiquid strategies in sub-performing and non-performing debt. Again, an innovation at the time, not so unusual as we see it today. And so we had the conviction that we had a really interesting investment thesis. It would be unfair for me to say that it was easy. We thought we'd just kind of get going, and our projections were off and to the right. But the reality is we started with $4 million in AUM and did our first trade in June of 1994. It took 3 years to get our first paycheck, and it took 10 years to get to $1 billion in assets under management.
But so many people got their start in the early 90s. Many of the PE firms that are cornerstone names right now started then. And a lot of it was actually because nobody was hiring. It was, the fallout from the savings and loan crisis. We could fill in the blanks there, but a lot of the big firms that we know today took a risk on themselves at that time, as you did.
Yeah, that's absolutely true. And I will say many of them are still friends today, and many of them were early investors in Varde Partners. So it was kind of a tight community in a way as well. So I will just say the pull for Empowered Capital, very different. Now I'm at an entirely different point in my career, and it really was when I moved from that co-CIO and co-CEO role at Varde about 10 years ago, and finally had some time to step back and reflect on the industry and the business, and look at the industry more holistically, and then gain an appreciation for how few of the talented women with whom I'd started in this business were still in the industry. And then a series of data and research that helped me, I think, appreciate some of the more structural barriers for women and other diverse talent in this investment management industry. And basically that became kind of the core for founding Empowered Capital, where we're providing capital solutions to best-in-class emerging talent in the alt space. So very different point in time, point in place, and pull.
And quite a journey, which in some cases I think is maybe the most important thing, right? To
Extraordinary.
Yeah. Well, I'm gonna skip to a question a little down the list.
Yeah.
What's, and really speaking to Empowered, which is where you sit today, and really speaks to the effort that you've decided to move forward with. What skills or instincts did you develop early on that later proved critical as a leader and founder? And you can certainly speak to Varde as well in this context.
Yeah, for sure. So, I got in those first 10 years that I described, there were just so many fundamentals, right? Absolutely extraordinary. but I think I really learned relative value, but also kind of the shape of the trade, like really thinking through not just the base case, but the downside protection in every instance, and then how to think about optionality and the upside and how to structure your transactions. And I think while considering all of the stakeholders, so that was a very early piece that has very much influenced the way we think about the way we are looking for a win-win-win amongst our managers, our investors, and their investors in the case of Empowered Capital. Clearly, I will just say that you learn a lot about developing relationships. You understand your counterparties and what motivates different people. Those have certainly been lessons all the way through. But you're right, at Varday, I mean, that's where I learned to build a business and where you develop an appreciation for the fact that you've got a set of investment skills and an investment thesis, but you may or may not have had a lot of exposure to all the non-investing functions. And particularly now in the alternative investment management business, you can't show up in an institutional quality conversation without having a fairly developed platform from not just a fund standpoint, but understanding all the elements around fundraising, operational excellence, human capital, and then just having a strategic point of view. And so building that business from scratch, I think you learn a lot of those pieces. I learned how to be a good partner. I've had phenomenal partners all the way along, but I think I really appreciated the benefits of complementary skill sets and collective intelligence. And then, the other thing you learn if you're in this business long enough is how to operate within a business that is constantly evolving. It's incredibly dynamic and increasingly competitive. So how do you understand your competition and how you're going to adapt your business plan for what is a competitive industry? And the last thing I'll say is I had the benefit of moving our family to London and establishing our experience and exposure to London and Europe. So boy, to have a whole global perspective on how capital flows was extremely, extremely critical in being able to bring all of those elements to Empowered Capital.
And thinking about your efforts with Empowered, I appreciate what you're saying because there are amazing traders out there that are just not good at those soft skills around building a business or being a good partner. Well, there are traders that are good at those things, but there are certainly many people that come to the table and what they're thinking about when they launch their fund or their initiative is that whoever they worked for before got too many of their fees and now I want to go out on my own. And going out on your own is more robust than just picking the right trade or structuring the right credit book or moving away from certain parts of the cap stack if things in the market are engaging you in a certain way or demand that you reassess the book. There's a lot more to it than just that. You have to hire well. If and everybody makes mistakes with that, you have to there's just so much to it beyond just being a good trader or a good investor. What would you, in the context of Empowered, how would you just advise emerging funds or managers?
Yeah.
How do you through Empowered, but also what would you say? Because often enough, I'm working with emerging managers too in my promotional business, and they need an infrastructure plan, even if they can't afford X, Y, or Z. Where does it look in 5 years when the AUM is there? But I understand some of those things fundamentally, but I'm curious about your take on that.
Yeah, no, Nancy, you're absolutely right. In fact, there's just incredible talent, incredibly experienced investment management talent. And then when you're excited and you're motivated by doing something on your own, entrepreneurial, or that you weren't getting your fair share, amongst a host of reasons why people decide to go through this. I do think that, and this is based on our experience in Empowered Capital, but also the survey of managers we've worked with, there is an underappreciation for the non-investing side of the business and the demands that it takes. And so one of the things we've done at Empowered is, we're really looking to seed those managers and provide the kind of capital that allows them to sustain themselves over what is generally a much longer period of getting that firm and fund formation process and the fundraising process in place. You need staying power, and staying power beyond what I think people traditionally think about. But the other thing that we're doing, and we're seeing it, I think people are understanding this as the market is more educated on this and as emerging managers go out, is how do we become or an emerging manager? How will you bring in advisory support in what is a pretty complex firm and fund formation process across those key areas? And Nancy, you picked up on it. You're not going to be able to go into an institutional investor conversation unless you've really demonstrated operational excellence, and can manage and can get through an ODD process where you've got fundraising, go-to-market plan, you understand your talent management and the plans and how you're going to create and build and sustain a team. And all of those component pieces are also quite intensive and can be very specific to the industry and can get quite technical. So to me, I think for emerging managers, my advice has been, think about how you create capital that's going to sustain you over a longer period of time than you're probably budgeting. It happened to me. And how do you bring in support across those non-investing functions to ensure that you're in an institutional quality position from day one?
Yeah, I appreciate that. What helped you see what was possible at key moments in your career, and what did that support actually look like? And you spoke about sponsorship, but you also speak about fortitude, which I think, sometimes these successes that people have look very sexy and easy on paper, but the road traveled is quite a different story.
Nancy, thank you. I really actually appreciate that. So, well, first of all, I've been just the beneficiary of so many incredible business partners, friends, and family. But I think it is important to share that I think I relied on a lot of people at a particularly low point in my career. And for the market historians, and Nancy, you might remember this, 2011, when the Euro crisis was kind of in full bloom. Here we were at Varde Partners. We had half of our assets in non-US dollar denominated currencies, and many of which were in the euro. And one of the responsibilities I took on at Varde Partners was really managing all of the foreign currency risk and or managing the hedging around that. So by the end of 2011, whatever P&L we had made that year had evaporated. Now, mind you, on a mark-to-market basis, but nonetheless, it still was a really difficult year. And at the same time, I'd been fundraising for the better part of 2 years, together with my business partners. But you're fundraising globally. It's like get to Beijing, like I was exhausted. And I really felt pretty beaten up professionally. And it was my mom who, it must have been near the holidays, and she said, Marcia, I really think you could use a coach. And one thing as an entrepreneur is, you're not necessarily going through like a lot of professional coaching and feedback. And so I did that. And I was nervous enough about the feedback that I did it on my own dime. I didn't know if I wanted to share any of the results, but it was basically 15 interviews, mostly with colleagues, some family and some friends. And about a month later, the coach read the feedback to me verbatim. I can still remember when and where it was happening. And it was very eye-opening and pretty humbling. So on the one hand, really great feedback, right? The feedback then was, well, you're not as self-aware of the fact that you probably are, underestimating your influence. And to that end, your colleagues have a little bit of a kick in the butt message for you. And that is, we want you to generate and show more leadership across the entire firm, right? You naturally go to the areas where you've got your most experience and or where you feel most naturally comfortable. But your colleagues are asking you to take more leadership across the entire firm. Make sure that you're delegating more intentionally to the next generation of leaders. and leverage your time to focus your time and impact. And
Wow.
that lesson has been has stuck with me for a very long time, in that even as self-aware as we are very much being, people are judging us more about the impact that we have, what we say, what we don't say, what we do and what we don't do. But it was generated from a very low point in my career. I came out with an enormous amount of positive energy on the other side of this, obviously.
Well, everyone, I believe, has low points in their career if you look at anyone's trajectory. And kudos to you for being open to the feedback, because it's kind of, if you're flying high, even if you have a tough year, you've had an amazing trajectory. And some people don't necessarily want to listen to 17 rounds of feedback or get a coach or anything like that. So kudos to you because everyone in our sphere has a different view of things. And if we can tap into their knowledge, we're better, because no matter who we are, we're just one person with one set of skills or one set of observations. So,
No, absolutely, Nancy. I mean, one of my pieces of advice is to make sure you've got some kind of external mirror, a trusted person at the bare minimum, or a group of people that are going to, tell you like it is.
appreciate that so much. After achieving success earlier in your career, what gave you the confidence to start again?
Well, I guess because the business is tough, I think I probably came in. I'm a realist, but I'm also an optimist. But I think I came in realistically, that it's not going to be easy, but also that there were several elements which were going to work in my favor, right? I mean, obviously, just the sheer amount of time having been in these markets, we've seen a lot of cycles, right? And you get some deep earned perspective, I think, in this business. I obviously, having built a business, particularly in looking to support the next generation of emerging managers, been there, done that, was a really important element of what we were trying to do. And then, to be completely honest, I had the personal capital to know that I would be able to start it, build it, and sustain it, and have the staying power required to do this over whatever period of time it would take. So those were elements that certainly gave me some conviction. And then at the end of the day, you've got to have a good idea. And at the end of the day, I was like, I think this is a pretty strong investment thesis. There's a general and well-documented lack of capital that's moving to this group of incredible emerging manager talent, which is very much diverse and female in its shape. And I've never seen such a capital gap in my life. And this talent tends to outperform their benchmark peers. That's a hell of an investment thesis, to go out and be able to say, here's a way that we can provide capital to best-in-class talent, get them to the starting line as fast and as in an accelerated way as possible, and create some really, interesting risk-adjusted returns. So at the end of the day, you've got to feel good about the investment thesis, and that it's something that the capital markets can wrap their heads around.
And this is contrary to the idea that it's automatically going to be concessionary returns if you're, that's a whole nother topic, of course.
Nancy, 100%. So part of it was being able to create something that, was very clearly, not concessionary in its nature. In fact, quite the opposite. You create this because you're finding talent that is actually outperforming and statistically can demonstrate that.
Amazing, amazing. How has your definition of success changed over time? It's a big one, I think, for people who've seen success, seek other things in addition to more success, seek a holistic approach, perhaps in some cases. What's your take?
Yeah, and for me, and for, having mentored and sponsored many, many people in my career, you're getting those building blocks in those early parts of your career. You really have to have some fundamental, starting points, and there are some table stakes, I think, in really understanding the fundamentals of this business. So that was really fun, fun early part of the career, right? But again, and maybe it was part of that kick in the butt feedback as you go through time, what you're being asked to do and how you show up as a leader very much changes. So it's not so much about your individual outcomes, but how you're kind of thinking about the organization collectively, and in a very strategic way. And so then it becomes the way I've thought about it and the way I reflect and provide feedback in mid-career is, leadership characteristics. So you're meeting different criteria. You're thinking about the firm more holistically than your individual contribution, and you're bringing good judgment to bear, right? And you're thinking about the long-term sustainability of your business. And for me at this point in my career right now, it's very much connected to purpose. At the end of the day, if we're able to kind of make step into a capital gap and start to educate the market, but also support that next generation of management, I mean, that's incredibly purposeful. So your career changes. The one thing that should never waver is your fiduciary duty. And appreciating that, you are operating as a fiduciary and to your underlying investors, that cannot change in your career. And I was fortunate to start at Cargill where their ethos was your word is your bond.
I appreciate you bringing fiduciary duty into this at a time when, underwriting is sharpening up from what I see. Other dynamics in the market as well. As a leader, how do you think about creating and maintaining a positive company culture?
So I'm obsessed with talent and culture, and I see them as being very much connected, right? So I've reflected on this a lot because when we started Varde with George Hicks and Greg McMillan, we did not go out and say, this is the culture we're going to have. But we kind of set some, I'd say, a tone very early on by the way we operated. So we went in as equal partners. We were a third, a third, a third. We talked, it was really good. I mean, those are like starting fundamental principles, right? We appreciated that we had complementary skill sets. We knew our Myers-Briggs. We understood that we made decisions differently, but we would bring mutual respect to that, and that we wanted a collaborative environment. So then, and we were going to be very fastidious about our hiring. So when that happened, we attracted talent that was okay with being in a collaborative no-star culture. And every person that got hired brick by brick, ultimately kind of led to, what I think is was a really excellent culture, and one that was kind of embedded in a collaborative environment. It wasn't until we were 20 years into Varde that we actually, codified our values. But then when we started for Empowered Capital, I'm like, let's start with the core values. And we, basically collected ourselves, talked about the kind of environment we wanted to ensure that we had and how we would true up to those values on a regular basis. And so that was a very early process. It might have even been before we actually named it Empowered Capital. And we identified these core values of integrity always, fearless authenticity, innovative investing, winning together, and unabashedly fun. And we true up to those core values, and we said, how is that showing up in our investing? How is that showing up in our external approach? All of those pieces become a way that we true up to it. And then fundamentally, we're looking to create a culture where we really are listening to that feedback, Nancy, right? And that means we're bringing diverse perspectives, we're bringing a lot of diversity in backgrounds, and, done well, that should lead to continued innovation, a psychologically safe place for people to work and thrive and build their careers. So all of those pieces have come hand in hand, but I little flipped the script between what we did at Varde and how we started it in Empowered Capital.
I appreciate all of those bullet points, having grown up in asset management, and that you started with the core values when you launched Empowered. That's great. And how have you stayed grounded and authentic as your responsibilities and visibility have grown?
Well, you're kind to suggest that I've stayed grounded. Look at this business is so humbling. Like
Yes.
if you're really going back to that fiduciary point, if you're a good fiduciary, like it takes consistent hard work and talent and a lot of care for your investors. So I think the business is humbling.
Yeah.
And I've often said investing is just humbling. Raising three daughters is humbling as
Uh,
well. They're now adults. I can say that, they're lovely and a good dose of humor and unconditional love gets you to a really nice outcome. But I would say that was also a bit humbling, especially when they're kind of like dual tracked. You're working and you're raising this family at the time.
uh,
But again, I think it goes back to a prior part of the conversation. It's about really being self-aware, but also taking feedback and trying to do that as authentically as possible. I do it with our employees, with our managers that we're supporting, and with our investors, right? So how do you create a regular feedback loop and try to stay as intellectually honest about that as possible? It's very easy to get above that and have everybody basically, giving you kudos all day. When you're in a very senior leadership role. And I think it can be, you have to be quite intentional about that. And then when the going really gets tough, you just true up to those values.
mm, mm. Oh, I appreciate that. And now we're coming to kind of the advice section, I guess, of the questions. For women in finance who feel pressure to follow a narrow or a linear path, when there's incredible pressure to do that, to just chase the next promotion or whatnot, what would you want them to know? And entrepreneurship is certainly not for everyone. It's
Yeah.
but any advice for folks who feel pressured to follow that linear path?
Yeah.
Also,
And
I have
so,
a quick question regarding that, if you don't
Sure,
mind.
of course.
So, in the beginning, how you were sure that your idea is gonna work out and you're not gonna disappoint investors or something like this, like advice, please.
yeah. So, well, I think and it's a little bit I touched on. So the question is like, how did you, how did you know that you weren't going to disappoint your investors? You're really starting with conviction on that investment thesis and this combination of experience there. And in this business at this point in the alternatives markets, those are table stakes. You really have, and a tailwind to that investment strategy. So it's excellent experience that is significantly aligned with the product that you're looking to sell. Sometimes I see people coming out with ideas that aren't related to their actual track record. Even if you don't have an attributable track record, you've got an ability to be able to show that the work that you've done is consistent with the thesis that you're looking to bring forward. And then it's really bringing a combination of a willingness to, understand all the kind of component pieces around the execution of that strategy. I think investors are incredibly sophisticated in thinking through all of those component pieces. So at the end of the day, it's and then you're going to have a ton of credibility because people will reference check every single piece of the things that you kind of go out there and suggest are part of the strategy and part of your background.
My
So having a very clean, not perfect, but a clean record of that is going to be really critically important because it is highly competitive.
Thank you so much. I appreciate it.
Also, the market cycles are what they are. They go up, they go down, they go. There's a lot that goes into assessing future risk, and sometimes things happen that are not foreseen, and you have to be prepared for that. I mean, there's transparency, and then there's maybe speak to that, just furthering the question that
No,
was.
I think that's a really good point. And here's what I found is aligning your capital to your strategy and making sure that it's well aligned in terms of its tenor and that the terms of what you're seeking to do in terms of the type of funding is consistent with the strategy is a really important starting point because you want to align what you're doing and what your investors are committing to from the very beginning. So I think the thoughtfulness that happens at the very beginning is a really important starting point, and then also I think creates more confidence for that investor. So when things inevitably do not go exactly according to plan, you're able to go back to that investor, explain what happened and how what you've done, is unlikely to happen again in the future, and or is not going to be, affected by the shape of the fund and the capital. So there's just, I think, a lot of upfront alignment makes sure that you're in the right conversation with the right investors. So once you've gone through all that difficult fundraising environment, if you've got the right partners and you treat them like partners and you are transparent and you're a good fiduciary, they are remarkable people at the end of the day. And if you're good at what you do, they are going to understand that there are bumps in the road and that it isn't a perfect path to total return.
Mm-hmm.
That's been my experience.
I appreciate
But
that.
get it right up front.
Right, prepare them for how you're structuring their investment and what you see coming, and be as transparent as possible.
Absolutely.
I have one more question for you, but I want to also open it up to the audience in tandem. We did just get an audience question. Does anyone from the audience have a question before I move into the last prepared? Anybody? And okay, looking back, Marcia, what perspective would you offer your younger self?
Yeah, so I appreciate that. I've given it a little bit of thought. I think I'd say, hey, you did pretty well. And what would I have said? And mind you, this advice I'm giving to my daughters and their friends, some of whom are in financial services and others are in completely different career tracks, right? Like, you better, for the most part, you loved what you did. I mean, most of the hours of the day, I really enjoyed what I was doing. Clearly, not every moment is fun. There's just no question about it. But we spend so much time in our careers, right? You really have to love what you do. The second piece is, kudos. You built a career that aligns with your values, and it aligned to the people you chose to work with and the organizations that you worked for. And then third, you kept your head up like your dad asked you to do when you were working in the drugstore, and you took the leap and were opportunistic. And I bring that one up particularly to this audience. I suspect most people have heard this, but the reality is that women and our daughters have this tendency to feel like they have to be confident that they've got all of the qualifications, all of the skills, 100% before taking the leap to ask for promotion or raise or maybe start your own firm. Men do that at about 60%. And I think I was actually like an 80%er. And I think that very much served me well in my career, is that I was willing to kind of take the leap and have some confidence that you can figure it out as you go. And all of those were accelerants to a career, and this openness to ideas. I will just, for example, the idea of going to London. My business partner, George Hicks, just mentioned it with an offhand remark in May, and we were there by August, ready to roll with our entire family. And it wasn't even on the radar. Empowered capital wasn't on the radar 10 years ago. These are things that required an openness and an interest and a continued love for the business.
Marcia, oh, sorry.
Please go ahead. No, go ahead. I'd like to open it up to others. Please go ahead.
Well, I was just going to say there are a couple of questions from the audience.
Sure.
One is, how do you get a sponsor or an advocate?
Yeah, thank you for that. We know that we know statistically that women tend to be over-mentored and under-sponsored. And I've done quite a bit of work on this because of the fact that I had the benefit of this sponsor, although I didn't really realize it until quite some time later. Also, people who are sponsored tend to be promoted at about twice the rate. So it's a very, very powerful piece. One of the things we did at Varday for a period of time was actually kind of assign sponsors, recognizing the power of that and helping leadership have an understanding of what that would look like. I think more informally, I've adopted the idea that you can think of like, it's not like there's one end of the spectrum with a mentor and the other end of a spectrum as a sponsor, but if you can think of it more as kind of a continuum, and that for example, having somebody who's willing to give you increasingly challenging and more complex projects that you continue to do well on becomes a natural way to developing that, moving somebody from a mentor to more of a sponsor. Helping them ensure that you're in the meetings or in more senior leadership role or in more senior conversations is another way. So you can do it kind of, you develop it a little bit of over time, as opposed to thinking that it's a binary kind of outcome, but something that you can work with folks who are naturally looking to mentor you and move them towards sponsorship. It can be a tricky dynamic if you're saying, hey, will you sponsor me in an organization? But I think I've adopted this idea of kind of getting visibility in meetings and with increasingly complex ways as developing towards more direct sponsorship.
Thank you. I see another question. Ming, I'm not sure if I'm pronouncing your name correctly, but I see your hand is raised.
Yes, that's right. Thank you so much. Marcia, thank you for all your sharing. And it's really good to know that it takes years to build your own business. From a slightly different background, I was doing investment banking and now I'm breaking out on my own while raising three boys. So I have two questions. When you're talking about sponsorship, can we still get sponsors while we're doing our own thing? And the second question is for networking. I know that it's a really big piece of doing your own business. You have to get new investors, or in my word, you have to get new deals. And for most part, all these are quite still like a man word, and people already have their own pack. So like they created own boy clubs and all, and they just send deals to each other. How do new bankers like me getting into that and get their referrals?
Well, first of all, congratulations. And I'm keeping all of these kind of balls in the air. It's incredibly demanding. So congratulations already. It's what you're describing in broadly, I'm using sponsorship and networking language, is a big reason, and there are others out there doing it, that we founded Empowered Capital, because this idea of being able to kind of go out on your own requires staying power. So it requires capital, and it requires, in my view, or where we see a barrier to entry is understanding all of those kind of component pieces and having kind of advisory on everything from the firm and fund formation process to introductions that are networked and in effect becoming a sponsor to that underlying manager, right, in the market. So you're really kind of lifting up the manager with both capital and sponsorship. So, and to me, half a dozen years ago, I saw that as a real gap in the market. There's capital gaps, and then there's also gaps that you've, I think, appropriately identified in that sponsorship and networking. And bringing those component pieces together is one of the, I'd say, founding principles of firms like Empowered Capital and others that are out looking to work and seed emerging managers.
Thank you so much. I appreciate it.
I see one more question, and I actually have the same question. Do you have any advice for balancing career and raising children today? And how do you manage your day-to-day schedules of trying to do it all together?
Yeah, thank you. It's a good question. I took very much the approach that it wasn't about perfection. My daughters would say that I said, one drop ball a day is a really good day. You know what? And you're going to be just fine. So to me, it was in the category a bit of resiliency for everybody. All that being said, I think I've touched on the fact that I had incredible business partners. My husband of 40 years, John, was there supporting it all the way along, and being a partner in the process. And I've had a phenomenal executive assistant for a very long time. Anybody who knows me knows that you just go to Tara Anderson for most of the scheduling matters. I know that sounds a little tongue in cheek, but I've really leveraged my time with a lot of folks, and a willingness to not have it be all about perfection.
That's wonderful. Thank you.
Yeah, thank you for that. We have 3 minutes left. Marcia, I don't know if you have any closing remarks, but I know this has been incredibly informative for me and the ambitious women at Collaborative WIM and the CFA Society. Imagine
I
there's
would,
the
no,
same.
I would thank you, Nancy. You've been delightful. Thank you very much to the entire group. The only, I guess, my parting remarks would be the things we're doing, the way I look at things, and what you're doing at CWIM are very much aligned. We're all on this big flywheel of, moving forward. And so it's absolutely my pleasure to be part of this conversation, and I'm really thrilled with the work that this organization is doing. And we're all part of this flywheel toward, female representation in this industry. Well done.
Okay, thank you again, Marcia. Thanks, Collaborative WIM and the CFA Society New York. And, thank you, a double thank you, Marcia, for supporting female-led businesses and diverse-led businesses.
Yeah, thank you. It's a pleasure.
Okay.
Thank you so much. What a great conversation, and true in the spirit of our Honest Conversation series. The candidness and genuine insights shared are incredibly valuable and inspiring. Marcia, you mentioned it's not a perfect path. I think that's so true and relatable on many fronts. I'm Christine Tinker, co-founder of Collaborative WIM and equity portfolio manager at Northern Trust Asset Management based in Chicago. On behalf of the entire CWIM team, thank you to our wonderful and talented speakers, Marcia and Nancy, for delivering such an outstanding program. And thank you to our hosts at CFA Society New York for the partnership and for making this event possible. Finally, a big thank you to all of you for joining us today from all over the globe and for continuing to grow the CWIM community. As shared on the screen earlier, our next event is already coming up next week on March 24th. As part of our CWIM Connect coaching series, Adrienne Grace will lead an interactive discussion on the art of living from the inside out, exploring how cultivating inner peace can drive outer success. You can register for this complimentary event and more at collaborativewim.org. And the best way to stay connected is to subscribe to the CWIM newsletter and follow us on LinkedIn and other social platforms. We're even active on WhatsApp. So thank you again to everyone. Have a great rest of your day and week, and keep in touch.